Back to school doorbusters are in session at JCPenney. Through Sunday, while they last, save 60% on Izod school uniforms. Load up on $9.99 Arizona graphic tees and soak up the last drops of summer with shorts for the family, starting at $12.99. If it's easier, shop jcp.com now, pick it up curbside later. Shopping is back. JCPenney. Offers good on select styles through 7/17. Conditions and exclusions apply. See store or jcp.com for details. Do it!
Drivers who switch and save with Progressive save over $700 on average, and those savings add up. Imagine what you could buy in the future.
So yeah, I used the savings from switching to Progressive 50 years ago to finally buy my dream car. It's a self-driving flying car, but we just say self-flying now. You know, because it's the future, and cars fly in the future.
So switch to Progressive and save big, because those savings can add up in the future. Progressive Casualty Insurance Company and Affiliates. National annual average insurance savings by new customers surveyed who saved with Progressive in 2020. Potential savings will vary.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome, everyone. So glad you made it. If you're listening to this day, night, it doesn't matter. It's a great episode. Get your asses into the China shop. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
I'm doing good. Getting my butt kicked by some new exercises we've been testing out, and laid up all weekend with a bad knee, but
Ooh.
Getting better. Today's interview should help out with that. Take my mind off the pain.
To a different kind of pain. Today, we are thrilled to welcome the founder and CEO of the Market Forecasting Academy, Roger Khoury. How are you doing today, Roger?
I'm doing great. So good to be with you, gentlemen.
Roger, you got to... Okay, so you've been in this industry for a while, right?
Yeah. But 1996 is when I started.
But you didn't develop your demand imbalance arbitrage until later.
It was in 2010 when I really developed my own methodology. Actually, it's crazy when I tell you, I had to throw out 14 years of my prior education and training and experience in the market, because every time I had just invested in the best, what I thought was the best education I could get my hands on, it would work for a while, and then something would change in the market conditions, and then all of a sudden it would start to work inconsistently or poorly or not at all. Then I was off looking for the next new thing, what's working now, and that was like just an endless cycle for 14 years. And I thought something's very wrong with this. Like, if you go to medical school, you go to medical school once. If you go to learn how to become a pilot, you go to school to learn how to fly an airplane once.
Well, hang on. If you went to medical school in the 1800s, it might be a little different.
I'll give you that. But today's doctors, they get down and they go into practice, right? So,
right, yes. They can't go time traveling, but they should be good for their lifetime.
That's true, yeah. And the thing is, it just drove me nuts that I kept going back to learning, something else. And it's just like whatever I had before just was not going to work right now. I had to go learn a new thing and another thing. And it's just like it was always this thing. I find out just something is off. And I kind of threw up my hands and surrendered. And then I, honestly, when I thought I was coming really close to something, I thought I had it. And I almost broke my computer monitor. I was going to punch it. I was so mad, and it was one of those days where I really broke. I just snapped. And when I do that, when I snap, generally I like to go to the beach, and I lived in Southern California, and I wasn't far I took a drive up to Ventura County, a place called Silver Strand Beach. And it's a popular surfing point, but it's not like a tourist point, or a place for tourists. And so it's not very busy. And it's nice because they have a paved area with, benches and things you could sit down, watch the ocean waves, listen to the ocean. Then you can watch these surfers. So I'm looking off to my left, I'm watching this, and I started counting, which is, I still remember, I don't know why I started counting these guys, but I started counting. Maybe it's just to distract myself from my just boiling over. But I counted 17 surfers, and so it was such a pivotal point in my life that day because it changed everything. Watching 17 surfers surf and take a bunch of waves, and then kind of noticing that there's two surfers that are off to the left, away from the other bunch. So the 15 were kind of taking wave after wave, crashing and burning, getting some good rides. And I thought, the guys off on the left, these two probably are amateurs learning from this group of probably regulars. And about an hour and a half into that, I realized a very interesting pattern. Every time that the two surfers off to the left would take a wave, they would have a nice surf. It would be just a nice ride. It was smooth. It was good. They weren't crashing or burning. I thought, wait a second, those are the pros, and everyone else was an amateur. And I realized, wait a second, these guys weren't looking for every wave that looked like it had a potential for a good ride. They had some way to filter out which waves were not likely to give them a bad ride. And those are the waves they took. So they weren't actually surfing very much, but when they did surf, they really enjoyed that ride. And I thought, and I had the epiphany. I had that proverbial light bulb moment in my own mind. I thought, my God, wait a second. I'm in the markets looking for opportunities to make money. But that's what's blinding me from something that's going on that keeps throwing me off. And so I need to be looking for opportunities that are not likely to lose money. And everything changed from that perspective, guys. I could not wait to get back. I almost got a speeding ticket. I was just able to get out of that one. And so I got home and literally my life changed. And from that moment on, it was about 1.5 years to almost 2 years of literally 14, 16, 18, sometimes 21-hour days straight, 6 and 7 days a week for all that time. I mean, it has to be 10,000 plus hours in that little short period of time. And it was just, that was the transformation that occurred. And I literally had to throw everything I thought I knew about the markets, and I had to approach it from a completely different perspective, which is pretty humbling, I have to tell you, because I failed math twice, not once in high school. So I'm not the guy you'd think would come up with something like this, but it was just pure grit, and I just, was, passionate and obsessed with this thing, and I was going to just not give up. And so I kept at it until I figured out one thing after another and by the way, I had a lot of serendipitous moments where I'm pretty confident there's something bigger at play here, because sometimes, there's things that feel like they're providential. They're meant for you. It's your path in life. It's a calling. Well, I've never been motivated by money like most people are motivated by money. I'm not someone who, I tap into something and then I want to just, go crazy with it. I want to utilize it like a tool to provide for me what really matters the most for me is I need time freedom and an abundance of that, where I can just spend my time where I want, how I want. What's important for me in my life is relationships. I love spending time with people. And that's really what kicked off my teaching career, because I never intended to teach what I developed. I did it for myself. I never thought about doing anything as a business. But when people started asking, how on earth are you always out socializing and volunteering time when everyone else is working? Are you trust fund baby? Did you win the lottery? What's going on with you? It's like, no. And when I tell them, they go, wow. And one day at church, actually, it was after church one Sunday, a lady came up to me and she said, she was actually the first person to ask me. So this was like 2 or 3 months later. She says, hey, Raj, my son just graduated high school. Would you be willing to teach him and mentor him on what you develop, what you do? Because he's interested in finance. And I was like, oh my gosh, I used to teach Sunday school. It's very rewarding to teach. I'd love to teach him. Why not? And that's how it started. And of course, the ripple effect from that just kind of turned into more people asking, wow, would you be willing to teach me? And it was just, and it grew into something I thought, wow, this is amazing. People are willing to value my time and my expertise. And it's kind of silly. Like, why wouldn't you leverage your success and contribute to someone else's life and help them succeed right out of the gate versus struggling like I did all those years to figure this out? And it was a phenomenal experience. And that's kind of what led me to where I am today.
Do you think that struggle, though, is important?
Oh, that is the $1 million question. The struggle is 100% critical to the success. I think people who succeed without really struggling are not really tempered and are not really ready to manage that success. I mean, you see it when, there's a statistic for lottery winners. When they win the lottery, I think 90+% of them end up in a worse position than they were before they won the lotto, because they weren't really prepared for that success. So the struggle was necessary for me. And part of what I had to learn to teach actually was, now I have a whole philosophy, because early on when I thought I could help everybody that wanted help, I didn't have the wisdom of teaching this sort of skill set, for life that I needed to learn, because people, you would be amazed at how you'd see like a grown, successful adult suddenly their mindset shifts into a similar mindset as someone who's just 16 years old, got their driver's license, and daddy just bought them a brand new Lamborghini. Not a good combination, right? That's like a bull in China shop right there.
Yeah, yes.
So you would want to invite that into your life. And that's literally what I was doing in the beginning. I didn't realize I had to learn to become selective. I had to learn to look for personality types, circumstances in life to make sure that that's a good fit. I take a hands-on approach because I really love interacting and having these relationships that turn into lifelong friendships, and a lot of my clients feel like family to me now. And so I'm very hands-on, and I believe that's the only way that I can really impart this skill set with any intellectual honesty. It really requires accountability, mentorship, a little bit of hand-holding, being able to feed back to a person who developed it rather than someone reading off of a script. You know what I mean?
Yeah,
so So I learned a lot of those things myself, and I took pride in that. And so absolutely the struggle was critical. In fact, if it wasn't for the struggle, I wouldn't have known to throw out so much of what I thought was important. A lot of the basics in what are traditionally taught are the very things that derail us, and we don't even realize it. And I think we're going to get into that a little bit here today.
I hope so. But first, I want to hear a little bit more about the selection criteria. Like, what are some of the things that you look for in the potential students?
So that's a great question. So some people, unfortunately, the industry itself kind of tends to sell people on, getting rich quick, making a lot of money, and trade for a living. And so, well, all those things in and of themselves are not necessarily bad, but they're misleading also, because if you've got someone with a little bit of capital and they really need to make a lot of money, they're unhappy in their life. A lot of times, they get equipped and they know just enough to be dangerous, and they don't have the ability to really just build it and let it compound. They get impatient, in fact, and they self-sabotage. It's very, very difficult to overcome our natural human tendencies, and I think people don't really respect much of their human nature. They think, well, I'm Roger Khoury, and I know myself, I'm like this, and I'm not thinking about, well, but when I'm tempted, when I'm in the heat of the moment, what does my nature, my humanity cause me to do? What am I tempted, and do I have the kind of self-control, the discipline to control that, unless you're a Zen monk or some kind of a monastery, you probably don't have that kind of self-control. And so it's just unwise to set someone else up for failure like that. So I look for people who have enough capital where the returns are going to be, it's going to make sense for them. They can they're actually happy with that. It makes an impact. I look for people who are not desperate, not trying to make up for something in a desperate way. Now they may have some losses they'd like to make up, but they don't need them. They just like to kind of get those back, and they don't have that rushed, anxious, approach to the markets. They just want something consistent. They want something they can be confident in, which is those are the cornerstones of what I've developed. They give you consistency and confidence. It takes away the fear. You don't have the need to hold on to large drawdowns. No more holding on to negative downturns. No taking big risks. It's just very consistent. And I think that's the key to someone's ability to come in and succeed, because it's not like Lamborghini. We all know what a Lamborghini, how it performs. You can't put that car on a 16-year-old who just got their driver's license. That's not going to be a good combination. You want a mature person, someone who wants and will enjoy that vehicle, but will not abuse it, right? Because any good thing can turn into a bad thing very quickly if we're not applying it, wisely.
That's well said.
Thank you.
Patience, I think, is one of the things that many of us struggle with. You sounded like you had your epiphany about the patience, but how did you actually go through and follow through on that? Because recognizing the need for it and actually being able to follow through with that commitment to being more patient are two different things.
So patience is such an interesting virtue. So when we're told, okay, if you're as a child, can I go out and play? No. Well, when can I go play? Just be patient.
Yeah.
Okay, that's not an answer. You've just given me another unknown, and now I'm frustrated and I'm anxious. I'm like, okay, is it time yet? Is it time yet? Is it time yet? And it's very difficult to control. Even as an adult, we refer back to this. There's an uncertainty. I'm uncomfortable. I don't know what to do. By the way, uncertainty drives our fear and our greed. Both have self-sabotaging, destructive outcomes. So Well, what's interesting is when all of a sudden you're asked to be patient, but are given objective data as to, well, for how long. So, for instance, when it's not as hot outside. Right now, it's 105. When it's below 95, I'll let you go out and play. Okay.
Mm-hmm.
Well, when is that going to happen? Well, let's look at the hourly forecast. It looks like that's in about 3.5 hours from now. So it's noon right now. Wait until 4 o'clock. You can go out and play. Okay. Well, now I've got data. Now I can go do something in 4 hours. I know what I have to do. What I'm looking for. Does that make sense?
That does, yeah. You actually have, yeah.
Okay, so
yes.
I'm not likely to keep bugging my mom when I can look at the clock as a 10-year-old and know exactly what's going on, right?
Mm-hmm.
So as an adult, when you have objective data that says the market's stormy right now you can forecast where things are going, but if you're forecasting where things are going and they're stormy, it's like you deciding you're going to go run your errands in the middle of a storm. Your chances for hydroplaning, getting into an accident increase dramatically. So wouldn't it be wiser just wait for the storm to pass and then go run your errands, go out and go to the market and do what you want to do? Doesn't that make sense?
Yes, it
Absolutely.
does.
So when you have that kind of information, it's not hard to be patient. Now the challenge is, and this is why I don't like to take people on who are desperate or anxious where they need to make money. It's better when they come and they want to make money, they want to enhance their situation, and they can work towards something where they can replicate their income and have a little part-time effort that replaces a full-time income over 2, 3, 4, 5 year period, depending on what they're starting with. That's realistic because of the consistency that compounds that allows you to do that. But when you have an anxiety, now the problem is, even though I know I should wait, I don't want to wait because maybe I can just grab this little thing real quickly. I can make some extra money. See, now I'm anxious. Now I start to rationalize, foolish behaviors, right? So you see how there's a balance here between like the right personality, the right circumstance, as well as, combine that with the right knowledge, the right objective data that we can act on that and be successful. Does that make sense?
It does.
Yeah, I'm going to have to get off the call. I don't fit your criteria. I'm sorry. I'll get going now.
Well, that's okay. You practice on that. We'll talk again a little down the road. It's worth it, believe me. It's a good practice to go down that road and just really work on what I need to do and I come back when I'm properly prepared.
Yeah.
All right. Well, let's talk a little bit about the strategy that you've come up with, or the method, I think is the right term. Demand Imbalance Arbitrage, as you call it.
Yeah, so demand imbalance arbitrage is basically you're looking. So what I had figured out was most people are looking at technical analysis and or fundamental analysis or any of those subsets of those. But there's like 6 other factors that drive demand in the market, and so often people are just blindsided by things they don't realize are going on. So they see something, they see, well, I can see all these things, fundamentally in technical analysis. It looks like it's just the market's poised to be bottoming right now, and it's going to go up and give me a nice little, push. Okay, great. So they go in and they look at some kind of a support level. Price shouldn't go below this previous support that I've seen established, and so that's where I'm going to put my stop loss at, if they put a stop loss at all, which I strongly encourage.
Yes.
So now, and then they get in, and then what happens is the market triggers them in, it teases them, looks like it's going to go their way, and then it comes down, stops them out, and then runs right up to where their target was. And how maddening is that, right?
It is infuriating.
Okay. So now, what happened there? Well, fundamentals said it should go up. My technical analysis said it should go up. Everything that I've ever been taught said it should go. Why did it come in? It feels like someone personally came in, nicked me right out of the market, and just took the right was laughing at me as I let the market, just carry on without me. What the hell was that about? Well, that's called a prime pool of liquidity. What's a prime pool of liquidity? Those are areas in the market that an institution, a broker, a market maker, because of their insight on the order flow and the trade flow, and of course there are people who try to play strategies off that. Let's say you got to know about order flow and trade flow and volume, stuff like that, and that just it's yet another, just one aspect, because again, this is just the third in line from what we talked about, technical analysis and fundamentals. There's still 5 other factors, right? So there's all these things that you have to kind of look at and combine. And what I did was, now this sounds like it's a lot of complicated stuff, and it was at one point for me. But what I ended up doing, and this was also kind of just I had moments that were just, seems to be just divine almost, that kind of, I started to see patterns and things I was correlating, where I started to kind of melt this stuff, all these little different things together into one visually intuitive indication of all of the demand factors in the market. And that gave me a real-time snapshot of what's happening with demand in real time. And if I know where demand is in real time, think about what causes all price movement up and down. It's demand, right?
Yep.
Demand causes price to rise and fall. Now, because there's hundreds of thousands of interactions a day, in the markets from, globally all over, we see prices cycling up and down throughout the day. Well, what's interesting is, if you can imagine in your mind's eye that I'm holding a rubber band between my 2 hands, between my 2 thumbs, and I'm stretching the rubber band out. Now, if I'm stretching out just a little bit, not to its max, okay, we know that there's a good probability it's going to snap back. But the problem is, there's more room for it to continue to stretch out even further until it reaches its maximum, stretching capacity, right? Now, I have a very low probability or low risk that it's going to keep going further away from my other hand because it's so far stretched out, right? That's now an area where, if I want to take a bet that it's going to be snapping back, I have a very high probability with a very low risk that I'm going to be successful on my bet, right? So in the market, we don't want to bet, we don't want to gamble, but what we want to do is invest in these very efficient, very effective, high probability, low risk opportunities where demand has moved very quickly and significantly away from price. So much so that you can see, based on the analysis, that price is so far stretched out away from where demand is that it's very statistically unlikely to continue moving away from demand, that it's going to have to snap back to catch up to where the demand is. So now, if it's just stretched a little bit, that represents an opportunity. But that's not a great opportunity. And this is the ability to assess whether I have a 50, 60, 70% probability that it's going to snap back versus an 80, 90% probability that it's going to snap back changes everything. Because psychologically, guys, it's very difficult to maintain a process that is working for me if I'm going to be wrong 30%, 40% of the time, because my mind's going to play tricks on me. But when I'm right 80, 90% of the time, especially when I have controlled my risk to like a 2% or less of my entire investment capital, that's not significant at all when I'm winning 8, 9 times out of 10, right? So I'm not holding on large drawdowns. I'm not stuck with these sudden market crashes. I can actually see when demand shifts very rapidly away from where price is. That tells me that within a day or 2 or 3 days, we're going to see the market correct by double digits very, very easily. So that tells me, hey, move into cash. Or if it's in an intraday, if you're trading intraday, or on an hourly or 4-hour or daily chart, it doesn't matter. Whatever time frame, whatever type of person you are, or whether you like to be trading, actively or passively or not, all things in between, you need to know where demand is. Once you know where demand is, you have a lot more confidence and control about your outcomes. So demand imbalance arbitrage is just that. We're arbitraging or taking advantage of the difference when there's a significant imbalance between demand and price. And that's what allows us to be in control, consistent, and profiting 80, 90% of the time. But that also means that I'm saying no 80, 90% of the time. Does that make sense? So we're actually seeing a bunch of opportunities throughout the day, throughout the week, and I'm only saying, maybe 10 to 20% at most of the opportunities I see are actually going to be worthwhile for me to invest my money so I can have a relatively stress-free experience and be very fruitful and profitable at the end. So I hope that makes sense.
It does. That sounds very appealing too.
It changes everything. I'll tell you. What's crazy is if I get someone who's experienced versus someone who's inexperienced, the person who has zero experience tends to come right out of the gate. They have no bad habits. They have no baggage to deal with, And they apply this so much better than someone who has experience right out of the gate. And the person who has experience, it's very difficult for them not to tinker and try this and try that, and they kind of extend the learning curve. But they get there. But when they do, here's what's interesting: the person who has experience, because of their inconsistent experience in the past and having disappointment after disappointment, many of them, a lot of my clients come to me with 7, 10, 15, some of them 20 and 25 years of experience, never having been able to find something that's sustainably consistent for them. They come to me and they're consistent for the first time. They have control and they're not stressed out. They go through this phase of like, I'm doing this, but I don't believe I'm doing this. What do you mean? I mean, that's your trade log, right? Well, yeah, but it's just like, it seems surreal. Like I've never done this before. I hope this thing doesn't stop. I'm like, no, why would it stop? You have control over this. It's not dependent on what the market does. It's you understanding what the market's doing and only engaging when you have these low risk, high probability moments. It's like, yeah, but it's just, I'm afraid there's going to be another shoe that's going to drop. And they go through this, like it's surreal, and it's just so they go through a period of like, I'm afraid this is going to end. This good thing's going to end. All good things come to an end, right, Roger? Well,
right.
Not necessarily. I mean, that's why businesses can thrive and continue and be a legacy. So this is a skill set you're learning. And so it takes them a few months, and all of a sudden, somewhere around 6 to 9 months into their trading the real money account, they're coming to me and they're like, this is crazy. This has turned into a form of relaxation for me. I used to wrestle and be stressed with the market and have this gut-wrenching stress, and I'm just wrestling with it. This is like so calm and peaceful. I'm like, recently I was like, yeah, it's like peaceful profits, right? You want to pursue peaceful profits. Like, yeah.
Stress-free trading.
So that's the fundamental shift here. And I think when you're not stressed, think about what that does for you psychologically. Now you're less likely to engage in self-destructive, self-sabotaging behavior. Does that make sense?
Yeah, it does.
So I want to read to you a recent text from a gentleman that's a more of a recent client. And what was really cool about his text to me was there was a day where he was trading and he had an important meeting, and he, because of the meeting, he felt stressed. He didn't want to miss the trade, but he didn't want to be late for the appointment, right, for the meeting. Right. And so he forgot to, he put the trade on wrong and forgot to stop, and it just shook him up. And I said, listen, there's an endless, infinite stream of opportunity. You're never going to be short of opportunities. You miss an opportunity, another's going to come along. So there's no reason to ever have a fear of missing out, okay? Because the one thing that's constant and will always be there is an endless stream of opportunities. So it's not worth having that experience and stressing yourself out and having that trauma. Just pass and just say, that's okay, another will come along. Focus on what you need to focus on and be stress-free. So he sends me this text message. I said, so now I want you to just do me a favor and only take one trade a day and be done. That's it. And I want you to kind of give me a report at the end of the day and at the end of the week. So this is as recent as Tuesday, June 28th, right? So he said, hey, Roger, took one trade today, close to 2% profit, turned off my screen during the meetings that required my undivided attention. Okay, good. so listen, that's perfect, okay? Then on Wednesday, the next day, he said, had a stress-free 4% day today. Now I know what peaceful profits feels like. Have a great evening, right? And then Friday, he said, had a very successful and stress-free end to the week, about 3% each on Thursday and on Friday, up a bit more than 12% for the week. Very grateful for your help and guidance. Have a great weekend. These kinds of texts just make my day, right? Because you're seeing that you're fundamentally transforming and changing a person's life, right? That's going to change everything for this gentleman. And it's that kind of consistency and that kind of control, that kind of confidence that gives you a sustainable outcome, right? That's going to be something that you can reliably take to the bank. It's not going to change a year from now or 5 years from now, right? It's robust. It's as consistent as gravity, right? Because we're dealing with principles here, right? Demand is always going to be the thing that causes prices to go up and down. Would you agree?
I would agree.
And even when the market's being manipulated, that is a form of demand. And if we know that and we take that into account, again, we go back to the fundamental, basic driver of all price movement. Demand is always going to be there, just like gravity is always going to be there. So we know that if we're going to follow a process that shines a big bright spotlight on where demand is in real time in the moment, then I know what price is going to do next, right?
Mm-hmm.
And I know the elasticity of price. If I don't see it stretched out away from demand enough, because we have a way to look at that as well, obviously. And it's just, by the way, if you think about, gosh, Roger, this sounds really complicated. You're taking all these factors. Well, think about all the complicated factors that come into, your car when you're driving your car, and knowing how much fuel you have left to know how far you can take your car. So if you have a 250-mile road trip ahead of you, and you have a quarter tank of gas left, you can see that you've got a quarter tank of fuel. Well, there's a bunch of things that are going on behind the scenes for your car to tell you that there's a quarter tank of gas left, right?
Right.
So you don't have to worry about what's the complicated stuff behind there. All you have to do is visually look at that indication, and you can say, oh, quarter tank of gas, there's no way that's going to get us 250 miles, so we're going to have to stop and refuel. Well, that's data. That's objective. It's not something that's subject to anyone's interpretation. I don't think anyone who has any experience driving is going to disagree with you that a quarter tank of gas won't give you 250 miles, right? So it's that kind of objectivity that allows you to have that calm, control, confident experience in the market, and that's sustainable. So I hope that visual helps out.
Yeah, I do want to talk a little bit more about what you mean by demand. Like, how are you identifying pockets of demand?
Yeah, how do we measure demand?
Yeah. Yes. Exactly.
Yeah. Okay. So basically, at one point, I used to have all these. Thanks to the internet, you could pull all kinds of data now, right?
Mm-hmm.
So you could pull news data, and there's all these algorithms that tell you what the potential impact on news and all this stuff. So I had more than a dozen indications and 4 different monitors at one point initially to give me all this stuff, and it was so overwhelming. And it took me so long, and I had to kind of, my minimum time frame, like if I wanted to trade intraday,
mm-hmm.
my minimum time frame was a 15-minute chart, right?
Right.
But then as I started seeing correlations, I was able to begin to combine those different things. And so if you think about, you've got geopolitical forces, including central bank and macroeconomic effects. You've got volatility in its different phases. You've got market sentiment. You've got liquidity levels, which includes volume, as well as order flow and trade flow. But then you've got prime liquidity pools I talked about, which is the area that is someone who's privileged, and an institution, a broker, a market maker. They see things that the amateur trader does not see, or investor can't see, right? And so they know where the market can kind of stretch, so that they can see a pool of liquidity where they can go and target. Throw a little bit of their weight there. They can go, and that's where you see a broker that can stop hunt,
right?
And investment banks will trade against their own clients, right? So you get stop hunted, right? They run your stop, but they know that there's a pool of liquidity that can kind of expand, and then the rest of the market's they're gonna tap something that's gonna cause the rest of the market to trigger and run back up in the direction where the demand really is, where you've got a lot greater pool of liquidity pulling price back to it. So those prime liquidity pools are areas where the market's going to be manipulated. Now, it's not always manipulated because no one's always watching 100% of the time. We're humans, we're imperfect. So even those guys who have an edge, who are on the inside track, they're not going to be 100% on top of everything. So, but being able to take advantage and seeing, or not take advantage, but take into account that this area between this price and this price is an area where the market can get manipulated. And that's often below or above a particular level of support or resistance, depending on the direction you want to take,
right?
Up, down, or sideways, we don't care. But what matters is that you know where those areas are so that you can take them into account. Then if an event happens, you'll be just like chuckling as you see the market go run other people's stops, and then you're still part of that, and you're profiting. You're riding on those coattails because you can see that that's part of the analysis process. So that's something that's part of my process. Also, you've got imbalances between supply and demand, and of course, then last but not least, and it's the reason why it's at the end, because so many people depend on technical analysis. And guys, here's a major aha moment for a lot of people. Now, technical analysis includes things like Fibonacci, Elliott wave, Gann, and all the different things that RSI, Kettler channels, and anything you think of, right? Bollinger Bands, all these things. Well, those things are all derived from price. So
right.
When you have price as a lagging indicator itself to demand, and then you take an indicator that's actually lagging, it's derived from price. So you have a lagging indicator on top of a lagging indicator, right? So people don't think about that. It's like, well, no wonder you're being blindsided and you're behind and you're being surprised because, and it's the last thing on my factors of, 8 factors of the major factors that move price, right? And so those things, when you look at them, you need to look at them in a combined fashion where you can see, okay, the combined impact of all these together, when I was able to put them into this one visual indication at the bottom, it kind of acts like a fuel gauge. It kind of what's going to power price, and it's going to power it up or down. It's just there to see, and you look at it and go, oh, there's prices, down at some price level, and yet this visual indication is telling me that that there's way more bulls, and that where the demand is back, let's say 10 points or $10 or whatever you want to, it's way above where it is at now. That price is at an unsustainable low, and the majority of the demand is up well above. It's now the market's going to be. It has to come up and meet that demand. So when you look at the combined impact, you don't have anything that's really surprising you now, and that's what gives us the level of accuracy, because you're actually focused on not some trigger, I see a price pattern or a moving average crossover or some other thing that says buy now. It could be even as simple as someone's newsletter. It doesn't matter, but you want to have a process where you can go validate and qualify that. It's like it acts as a risk filter, so you can apply this risk filter and go, okay, I'm getting a signal here. I don't care how I got it, whether it's a price pattern or anything else, or a robo-advisor even, right?
Right.
Something that says, here's a good time to buy or sell short, whatever. Well, I do my analysis. I go, well, where's the demand at versus where price is at? Oh, well, demand's not that far away from price. So whatever's going to happen with price, it's not significant. That's going to kind of put me under stress because anything can happen there. That's a 50-50 or a 60-40. That's not great. So you know what? I'm going to pass on that. Now, it looks good on the surface. That looks like a great signal. But when I do my risk analysis and look at where the real-time demand is, all of a sudden it's not so sexy. So it's like, okay, that's easy to say no to. And then when I look at another signal, oh, wow, demand so far away from price. My goodness, this is going to be easy peasy profit. So I take that one. I've got an 80 or 90% probability for that hitting. Boom. It's easy money. It's like, this is crazy. It feels like I'm stealing candy from a baby. This is. Can I sustain this? And that's what kind of gets surreal for people. It's like, that was the easiest money I've ever made. Is that, can I sustain this? Well, yeah, that's what you're doing. That's, that's just, it's like a principle, right? It's like gravity. It's just always going to be there. It's like, wow. So it's a fascinating transformation you see where people have to really shift their mindset away from the traditional ways of thinking to this, because it makes it very efficient, right? Because whether you're a long-term investor or a short-term investor or intraday, when you know where real-time demand is, you now have the objective data to be able to very confidently, very accurately engage the market and have very consistent outcomes. And you no longer have to hold on to large drawdowns, take big risks, or mess with the inconsistency that everyone else is experiencing.
You mentioned the multiple time frames. Have you tried your method on different time frame, like swing trades, day trades,
yes,
long-term holdings?
Yeah. So interestingly, there are seasons where you could forecast things weeks and months in advance, and you'll be able to see that there's the environment for that. We are currently in an environment where you cannot do that, and you can see that it's almost like if you have very stormy weather and you got patches of like where there's a break in the clouds or break in the storm. Those are not times when you should be thinking about picnicking or they're like temporary short breaks in the storm. So you can see that this environment is not conducive for me to think about planning anything out, right? So I'm just gonna have to sit home and wait for this thing to pass. And so right now we're in an environment where really you can't go with any confidence beyond a day or two or three at the most to forecast what's going to happen. You're going to have a finger on the pulse, and it's a few minutes for someone who is looking at the longer term view. Just a few minutes a day will help them manage their longer term portfolio. But then you've got the person who's on a 1 minute chart,
right?
They want to scalp or they want to just intraday trade, and that's fine. They don't have to trade in the regular sense of the word where you're speculating on outcomes. They can actually invest in those minute cycles, right? Because of the hundreds of thousands of interactions, that price action's moving, you're always inevitably seeing see, here's what happens. Demand always moves first and then price follows. Now, depending on how quickly demand shifts is what causes price to sometimes overshoot and then stretch out and then come back and snap back. It's always it's this pendulum that's swinging back and forth consistently. So what we're doing is we're seeing these cycles, whether it's on a daily, weekly, monthly, or even every minute on a minute chart. So everything in between, it doesn't matter. Whatever you have an interest in, it actually serves you. There's no degradation of accuracy. As long as you're not going too far out when the environment's not really conducive, and you'll know because it's like I can't see anything beyond the next day or 2 or 3 or week at the most. Currently, there are other times, yeah, you're fine. So it's really applicable to any time frame, and it's just as accurate. And it actually, people sometimes think that this is. They lose sight of the fact that this is an analysis model. So it's not something that it's not a strategy where it only works on a particular symbol or a time frame or an asset class. No, this works on every time frame, on every symbol, any asset, any whether it's crypto, commodities, futures, index, stocks, forex. It doesn't really matter, right? In fact, you have people who like to trade options. Well, don't you need to know what the underlying asset's going to do so that you can have a successful options trade? So you really need to apply this analysis even for an options trade, right? So does that answer the question?
I forgot the question, actually.
You're asking about the time frames, multiple time frames.
Oh, the time frames. Yes.
Yeah. So it really is just a very different way of approaching the market. It's a paradigm shift for a lot of people. And I get clients that are, like I said, who are very experienced, and they come to me, and I tell them, you really need to you need to throw out everything you think you know about the markets, because I'm going to take things, even like the basics that we're going to cover the basics initially before we get into the meat and potatoes down the training. And you're going to notice that if you think that you know the stuff, you're not going to be looking for how I redefine and apply things differently, and you're going to skip and skim some of the nuances. So you really need to be asking yourself, as you go through the basics that you think you know, okay, I wonder what Roger's going to show me here that I don't know already. So your mind is open and looking to absorb the new information so that you don't skip unwittingly those little nuances because your mind is bored. I already know this stuff. I just want to get through it. I just want to get to the meat and potatoes. No, that is part of the meat and potatoes. It's a very important part
right.
of what you're doing. Does that make sense?
Oh, yeah. One thing I'm struggling with, though, is understanding what you mean by demand. Because when I think of demand, I think of looking at a DOM on a futures chart and seeing where all the bids are at. Like, to me, that's the demand. Those are all the people trying to buy right now.
Yeah.
Yes, good point. So that's an aspect of demand you're seeing, because you're seeing, the number of, buyers and sellers there, right? So that's just one thing. But what you're not seeing is, well, how far, what is that going to do for price? Have you ever seen, on the DOM, something that kind of reflected, there's a lot of, this looks like if I buy here, I should get a real, quick, good profit on this. And then and then all of a sudden these things kind of disappear and it goes away and you don't get the outcome that you're thinking. So it's a little bit of a hit or miss, right?
Like a spoofed order, you mean?
Yeah, exactly. Right. Yeah. So, because even following the DOM and any of those things, people like to trade divergences. Any of these things individually on their own, they're going to provide hit or miss experiences. But when you start to combine all the different factors, so when we go back, we look at geopolitical forces, right? Central bank macroeconomic effects, fundamentals, that's your kind of Graham Dodd, Warren Buffett style forces, volatility, that's affecting demand, right? Market sentiment, that's affecting demand. You can have something that's very fundamentally solid, strong, but the CEO says something and it falls out of favor, and the market sentiment is like, I hate this company, and it crashes, right? It can collapse based on just a tweet. So fundamentals alone isn't enough. Market sentiment alone isn't enough. So all these things that people try to kind of almost have a silver bullet for, it's cycle trading, or divergence trading, or order flow, or trade flow, or Fibonacci, or it's all, and then they get excited, but then they keep having this hit or miss. Well, why? Because they have a level of uncertainty that they're consistently wrestling with. See, I think the big shift here, guys, is this. When you have something that's caught your attention and you're interested in, you have no idea until you commit to it whether it's going to be successful or it's going to be a stressful hold and end up being a loss, right? You're not going to know until you commit to it. Well, the difference is now when you apply this analysis model, you know where the real-time demand is, you know before you commit with no less than an 80 to 90% analysis accuracy that it's going to hit your target or it's going to be a stressful hold and likely turn into a negative experience. So you see the sharp contrast there. It's knowing before you commit what to expect.
Go ahead, Dan. Sounds
yeah,
like
I was just going to say, I still doesn't seem to help me wrap my head around like how are we figuring out demand if it's not just like reading the DOM or measuring the volume?
Yes. So down below price on my charts, part of what I developed is remember I talked about that fuel indicator.
Mm-hmm.
It's a kind of a visually intuitive thing you look at and you could see it's showing you where the real time demand is, and you can look at it and it shows you kind of like, okay, let's just say price is at let's just talk about Apple and we'll just use round numbers. Apple's at $100, okay, and well you can see the demand is equal to when price was back at $70, and actually a recent example was Tesla. Tesla, when it was at 1,000 recently, okay, when you looked at when you put this little visual kind of fuel indicator below price, which is showing you all the demand factors combined together as an aggregate total, and it's showing you, okay, when it was up at 1,000, the demand was equal to where it was when it was back in the 700s. Instantly, you knew that Tesla was at an unsustainable high, and that within a day or two or three, it's going to correct and come back down to the 700s, and it's exactly what happened.
Interesting.
Okay? Does that answer your question?
I know that that's probably something proprietary, so it's kind of hard to really fully explain. But
so you've got an indicator.
It's an indicator that's a leading indicator, not a lagging indicator, right? So it's which is very different than what people are used to having, right? People are used to having indicators that are derived from price strictly, and they're lagging by nature.
Right.
This is a leading indication, so it's telling you what you can expect based on where the demand is in real time. So again, the best way I can help you connect the dots is if you think about when you sit in the car and you look at your fuel gauge. And so you're interested in a 250-mile drive. So you have an interest. There's an opportunity for you to take a road trip, and it's 250 miles long, you know?
Right.
So, and you see that you've got less than a quarter of a tank of gas. You know immediately that that's not going to get you 250 miles, right?
Right.
So it's the same exact thing on your chart. You see an opportunity in your chart, and you go, okay, this looks like a great opportunity to be buying into the market. And you're going, but wait a second, down here my fuel indicator is telling me that the demand is well below where price is at currently. So if it's well below where price is currently at, there's no way I can expect it to go even higher with any real reliability, right? With any real confidence.
So rather than thinking of demand as like actually buyers, like ready to place their orders, you're thinking of demand more as a measurable quantity.
Yes, precisely. That's an excellent way to, you know what? I'm going to write that one down. I'm going to take it from you if you don't mind.
Feel free.
So if I were to join the Market Forecasting Academy, do you walk through how you're measuring this demand?
So I teach you the process of how to. So the process now, how I've put it all together is proprietary, but the process itself is what I teach you as a life skill that you take and use for the rest of your life. And there's never a version 2.0, and there's never the next new thing. I've been doing this for more than 10 years, 12 years now.
But you're teaching how to read the chart with your indicator. To be clear, that's what we're talking about.
Correct.
Okay.
Yeah, and so actually, and lest anyone make a mistake of thinking the magic's in the indicator alone is just kind of part of the fuel gauge, right? But it's the process of how we interpret that and put that together. That process is the skill that helps you understand how to assess where real-time demand is, because we don't want to look at the market from just one time frame and indication that we have here, and that's it. Because that would be like you trying to go out and buy a diamond, and then you're looking only at one facet, one side of the diamond, and not looking at all the different facets all the way around, right? Because you can have a flaw on the opposite side, and if you're not looking at that, that's going to be a completely different valuation for your diamond. So we have a 360 degree view of the market, and that is we get there through the process of how we interpret this information visually, and it's very visually intuitive. So it's like, it's like playing a video game. It's not anything complicated. You don't have to do any math. You don't have to know any math. Again, don't forget, I failed math twice in high school, not once, right? And by the way, here's an interesting story. I didn't know if I was going to end up graduating high school until the morning of my graduation at 7:45 in the morning.
Oh, no.
By guess who? My economics teacher of all subjects. Mr. Khoury would not let me know if he was going to let me graduate. I'm going to repeat my last year of high school until that morning. With me. Like 7:45, he said, "Khoury, all right, here, get out of my face. I don't have to deal with you for another year. Go graduate."
Oh, man. I still have nightmares occasionally of that I hadn't finished high school. Like something comes back and it's like, oh, you never took this class, so you need to get your degree.
Yeah.
Oh, that's a terrible dream.
Guys, I got to tell you, this does not require any kind of academic background. Doesn't, what's funny is I'll have an engineer who'll sit there and can't help but wanting to know why and how, and he'll try and this and try that. He, instead of just following my process and doing what he's supposed to do, he's tinkering and messing around, putting his own spin on it, trying to figure out why it never worked out before me. How did I figure this out? Who am I? I'm not as smart as he is. Well, I get it. And then his wife will come up and says, "What's going on with my husband? Why hasn't he gone live yet?" Like, well, would you like to ask him? And he's like, geez, well, go ahead, tell her. I'm just not willing to do what Roger's telling me yet. Why? This is our retirement. You're wasting time. And then she'll say something like this. Gosh, I wish I was smart enough to do something like this. I'd do this. I'm like, whoa, wait a second. What do you mean you wish you were smart? Roger, we're high school sweethearts. I don't have any academic background. I don't have any business knowledge. He's the one who handles all our finances. I've never done any kind of investing or anything. I don't know anything about it. The only thing I know about a market is a supermarket. So like, well, we're the best person for this then. You don't have any baggage, and you're going to be likely to follow directions. And as someone who follows directions is who's going to get the benefits. Like, you think I can do this? Of course you can. So she does. 4 months later, she's running circles around her husband, who's the engineer.
That's funny because I sympathize with the poor engineer. Like, I want to know why.
Yeah.
Like the knowing the why is what's important to me. And I don't know why that is the case, but I don't know. I don't want to just do something because it works. Like that that feels not so, that doesn't feel fulfilling, I guess, is the...
Yeah. It's a trap. I have to tell you, it's a trap. It's kind of like, are you going to go under the hood of your car and kind of get in there and just break it apart to figure out why it gives you the performance, or are you going to just kind of read the manual, get in there and really enjoy the car? If you really have to get under the hood and really kind of reverse engineer how this manufacturer was able to deliver this kind of performance, you're going to... You
don't find that fascinating?
It's fascinating, but it's not productive.
It probably isn't productive. I can't argue that, but I still want to know. I
know. It's a trap. And I actually ask people that question because I've learned that typically with engineers, they really struggle with following instructions. And they often will say, well, I'm following instructions. And I look at that and I go, okay, show me. And I go, well, that's not anything I taught you. Well, yeah, but no yeah buts. The yeah buts don't work with me. That's not, you're not following directions there. It's very simple stuff and you're not doing it.
Right.
So yeah, that's a trap. And if you have to do that, now I do explain, I don't go into the proprietary, how I put everything together, but I do explain how it works, and why it's working, right? You get the philosophy behind it. You understand kind of the fundamental aspects, the building blocks. And it's kind of, it's interesting, by the way. It's kind of like having a set of Lego blocks, and you can build anything with it. A toy, a tree, a house, a car, something,
Spaceship.
And so people want like, especially the engineers, they'll think, well, can I turn this into an algorithm? Well, algorithms are things that you have to define all these things. And yeah, you could use AI and machine learning and neural networks and all this stuff, and that's all fancy, but we're not likely to see in our lifetime. Even quantum computers right now don't have the ability to interpret context like the human mind can. Okay, It's very difficult it knows the definition of the word runs, R-U-N-S, but now if I use the word runs in an entirely different context, it's going to mean an entirely different thing. So my nose runs, my car runs, the water runs, the boy runs. totally different things, right? Same word.
Right.
So, but the human mind instantly can see the boys running, instantly can see the car's running, the water's running, my nose is running. And so that's what allows us to actually be valuable. And who wouldn't want to be valuable? I mean, think about this skill set. This is a skill set where nothing and no one can replace you, right? You cannot become obsolete. You're not in danger of losing anything. And this is where you have the most control of your life, because all you need is a reliable laptop and a stable internet connection. You could be on the moon. You don't even care, right? And you can run this and cash flow the market and build wealth if you want, do whatever you want. And by the way, that leads me to another important point. Guys, a lot of people think, I want to trade for a living so I can have my time freedom and trade wherever I want. I'm not geographically,
Right.
Trading for a living is not a healthy goal. What you want to do, because if you're doing it right, remember I told you earlier, here's a hint. I said you're going to be saying no 8, 9 times out of 10, right?
Mm-hmm.
So that makes it a boring endeavor. So you really have to be, and that's why I tell people it doesn't take more than 10 to 15 hours a week, okay? And you really don't want to spend any more time than that because you'll self-sabotage. And you don't need more time than that because of the consistent compounding of the account. It turns into something very impactful at the end of the year. But here's the thing. If you come at this and say, I'm going to utilize this, the consistency, to replicate and ultimately replace my primary full-time job income through this part-time effort, whether it's early in the morning or at night or middle of the day, whatever, doesn't matter.
Mm-hmm.
Then what I would do is, now, once you've done that, go to the next step. Continue to compound that account because it's going to mean way more and it's going to compound more rapidly at that point, and take the abundance above and beyond what you need and start growing that and putting it into passive income yielding investments. So you never have a time in your life where you need to trade. Because sometimes life throws you, a curveball, and you're like, you're out for a month or 3 months, or something happens, God forbid, and you don't want to come back to the market feeling behind and stressed and pressured to trade, because now, guess what? You're under pressure. And if you're under pressure, guys, think of, like, I know you guys know how to drive cars. So if you drive a car and you're driving to an important appointment and you're late, you're going to drive that car very differently than if you're arriving early. Right? You're going to be more aggressive.
Yep.
Pressure has a funny way of making us do stupid things, and we get ourselves into trouble all the time. Sometimes it's a life-altering event. So I really guard clients against, hey, don't ever put yourself in that situation. So get to a place where now your passive income replaces your need to even trade, right? Mm-hmm. Now, when you trade, that's really abundance. Now you can talk about, now I feel wealthy, and I can, if I want to splurge, I'm in the mood to do something, like I want to rent a private jet and take my family to Hawaii. Okay, you're doing, but you're not taking out of anything you'd feel guilty about, right?
Right.
So that's a much healthier way, and I'm a big advocate to live below your means and really enjoy, live well, but enjoy your life, your time freedom. Don't create more things that require more overhead, more maintenance, and more out of you, right? Live life on your terms. Now, for some people, they want the high life, and that's fine. But I would just say, try not to live your life, impressing others. What makes you happy? Hopefully it's not impressing others.
I think, and is it George that always says that all traders turn into investors eventually?
Yeah, that's ideal. That's what you want.
So before we go, then, the last thing I wanted to ask you about, we mentioned it briefly on there. You said that you might be putting together a book.
Yeah, actually, I'm currently in the process of writing a book, and I'm hoping that I can get it done and published over the next 9 to 12 months. And yeah, I just one of the biggest painful feedback that I get from people is, Roger, why don't I know about you? How come I wish I knew about this? If I'd known about this a few years ago, you would have saved me so much pain and heartache and cost. And it's like, so because I'm not a marketer, I feel very humbled, and I feel very privileged that you guys and others like you want me on to interview me and kind of share this message. But I'm happy to share, but I don't want to turn into a salesperson and market this stuff. I enjoy that. By the way, 90% of my clients are all word of mouth referrals from existing clients. That says a lot right there.
Oh, yes, it does.
So I thought a book would be a helpful way to kind of say, hey, I've got a book out, and if people know the book is out, that might give them an opportunity to realize there is something out there that can help eliminate the uncertainty, give them control, give them consistency that they seek, once and for all. No excuses. I've had 40,000 plus trade reviews I've done now, by over 200 of my clients over the last 12 years now, 10 11, 12 years.
Mm-hmm.
And it's just this is consistency, robustness. It's based on principle. It just never changes. I've never once tweaked, updated, modified, or fixed my method. It's been the same boring thing that I've developed back in 2010. It's just never changed. It's like it's as constant as gravity. So yeah, I hope that through the book and a show like yours will help get the word out and help more people realize there are options that they can take back control and not keep chasing the next new thing in the market.
You want to tell everybody where they can find out more?
Yeah, actually, a wonderful place to go is marketforecastingacademy.com, where they can access a 5-day mini course primer or primer. Some people, I call it primer. Some people call it primer. But either way, it's a little mini 5-day course. You can binge watch and go through it if you want, but it details everything that you would want to know about demand imbalance arbitrage and what's behind it, what makes it work, what's the engine behind that. Mm-hmm. And with a lot of proof, visual examples, testimonials, everything they want. And at the end of that, if they like what they see and they feel like it's something for them and they meet their minimum requirements, they can apply for the mentoring program, and they will be interviewed and have an honest-to-God evaluation with me directly. I don't delegate the stuff off. I really care about individuals, and I'm genuinely. You ask anyone who knows me, a lot of my clients really end up becoming best friends and like family to us. And we just had a client come and spend 10 days with his daughter here at our home, which is great. And we're gonna have another client with his wife come spend a week, and we frequently have guests here. We just love the interaction. That's really how we've designed our life. We don't have any kids, my wife and I, so we enjoy hosting and just taking care of others. It's a lot of fun. So yeah, I hope you guys look into it. marketforecastingacademy.com.
I will stick that in the episode description so everybody can find that. You can also find you on LinkedIn.
Yeah, I'm also on LinkedIn.
Roger Khoury USA, it looks like. I'll put links for that in the episode description as well. Make it easy for everybody.
Thank you.
All right.
Roger, this has been a lot of fun, very informative.
Thank you.
Said a lot of things that we can definitely resonate with.
That's awesome. I really enjoyed my time with you guys. You guys had a lot of fun. Thank you.
No problem. Thanks for coming on. Dan, you got anything you want to add before we close this up?
No, thanks for coming by, Roger. It's been great having you. Great talking to you. You definitely, spoke right to my emotions there.
That's awesome.
And folks, thank you for sticking around to the end of the episode. We'll be coming back at you soon with a regular recording. But until then, happy trades.
Back to school doorbusters are in session at JCPenney. Through Sunday while they last, save 60% on Izod school uniforms. Load up on $9.99 Arizona graphic tees and soak up the last drops of summer with shorts for the family starting at $12.99. If it's easier, shop jcp.com now, pick it up curbside later. Shopping is back. JCPenney. Offers good on select styles through 7/17. Conditions and exclusions apply. See store or jcp.com for details. Do it!
Progressive presents Forced Metaphors about bundling your home and auto.
When you bundle your home and auto with Progressive, you get great savings and round-the-clock protection, which is as beautiful as looking your firstborn child in the eyes for the first time. Well, that's a bit much. Maybe it's more like looking your second-born child in the eyes for like the third or fourth time. Point being, the savings and round-the-clock protection are really, really magical.
Forced Metaphors, presented by Progressive. Bundle and protect today. Progressive Casualty Insurance Company and affiliates. Discount not available in all states or situations.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.